Oh, man.
All right, how's everyone today?
Good, thank you.
Doing well.
All right, well, I'm showing 3 p.m. sharp. So we'll go ahead and call the meeting to order. And then Lynn, do you mind doing roll call?
Sure, Chair Rogers. For the record, will you state that you're present?
Present.
Trustee Benavides?
Here.
Trustee Raymaker? I don't see her on the line. Trustee Waugh?
Here. Trustee
Wilson? Not here, but Chair Rogers, you do have a quorum.
Thank you, Lynn. And then Jerry, I think I always ask you this question for public comment. Do we need to read all 4 paragraphs?
No, we don't. We just have to ask for it.
Okay. Lynn, do we have anyone for
We
public
do
comment?
not. We do not. There's no public comment now.
Thank you. And then just, do we have a motion to accept the proposed agenda?
So moved.
Second.
All right, all those in favor say aye.
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 All right, motion carries. Then we will go to new business. And then we'll turn it over to Floresto to give us an update on the district's financial operations.
All right, thank you, Mr. Chair. Hopefully everyone can see my screen. Can you see the presentation?
Yes.
All right. Well, I'll start with going through the financial services updates as of fiscal year end 2022 before moving on to review of the internal controls. And you'll see unaudited on a lot of these slides. We're currently in the middle of our financial statement audit, and we're also early in the new fiscal year 2023. So there's not a lot of activity to report for fiscal year 23, but I thought it would be worthwhile to give the Finance and Audit Committee meeting an update on where we are for the year ending 2022. And you'll see here a summary of all consolidated sales tax revenues, the CTX, all the way through June. And this is the first time we've had a complete year. You'll see that the June number at the very bottom, we just received that amount at the end of August, on August 31st. So we won't have our new year, our first new year CTX revenue until the end of this month, September 30th. But I wanted to highlight this information because you can see there's a clear trend happening here. At the beginning of the year, in July, you'll see a 31% increase from the same month a year ago, which is a pretty large number. I've never seen an increase in any one month from the year before that high, but it just goes to show that the pent-up demand we were all expected happened at the beginning of fiscal year 2022. But you can also see that that rate of increase started tapering down around March, dropped all the way to 11%. And in the very last month of the fiscal year, it dropped to below 10%, about 9.5. Now, in any other year, the 9.5% we'd be very happy with. That's a solid increase from the year before. But I only highlight this table to show that there appears to be a trend happening, and we're keeping a close eye on it to ensure that we're prepared for any potential shortfalls in revenues over the upcoming year. For property tax revenues, this revenue has always been more stable. You can see that we collected $54.7 million in total for fiscal year 22. That's not only higher than budget, it's a pretty significant increase from 2021, actual numbers we collected there. And we're expecting to collect another $59.2 million in the new fiscal year, 2023. That's another significant increase, and staff does expect to collect every dollar of that budgeted amount, just like we did in fiscal year 2022. And you'll see we actually collected more in fiscal year 2022 than we had budgeted. So again, we can rely on that revenue stream. And I like to spend a little bit of time on this one slide because there's a lot of discussion about the volatility in the housing market and values there. And it's easy to forget that the discussion or concern about values are related more to residential real estate. And a portion of the district's property tax revenues comes from commercial real estate. And so the director of development, Joanne Pravetti, actually sent a graphic from the LVCCLD to the administration team recently that reminded us that there are current and new projects coming online as early as 2024 that will contribute significantly to the district's property taxes. Projects such as the Fountain Blue, the gaming property on the Strip, to entertainment venues like the Sphere at the Venetian. So we're looking at potentially billions of dollars worth of assessed valuations that would be coming online soon. Any questions about revenue before I move on to expenditures?
Flores, I did want to ask you a quick question in terms of the consolidated sales tax, given the negative trend that's happening. How does this impact projections that we have FY23 for this particular revenue stream?
This revenue stream, it would be a shortfall in CTX revenues. We budgeted $30 million for fiscal year 2023, and we collected $29 million in 2022. Assuming things don't change dramatically, we are on track or would be on track to collect the $30 million budgeted in 2023. But if it goes in the other direction, there could be a shortfall of, if we collected the same amount from this last fiscal year, that would be $1 million shortfall. So we'll just have to assess the magnitude of the difference, especially if it's a shortfall. But this is also why we design our budget to be prepared for potential shortfalls like this. I emphasize the ending fund balance a lot. And so even if we were to experience a shortfall of $1 million or more in 2023, we still have a sufficient or healthy fund balance that would allow us to continue not only operating the district as intended, but to support the large projects that we have, including the West Las Vegas Library.
Thank you.
Moving on to expenditures. These numbers, as I mentioned, are still being audited, but we don't expect any major adjustments. So the numbers won't change very much as a result of the audit. But I wanted to go through these major expenditure categories just to highlight for the Finance and Audit Committee meeting how these numbers affect the upcoming budget year, the current one, 2023, because we will be presenting the preliminary budget to the committee again next April, and then it goes to the board for final approval. But we prepare these numbers when we finalize them around March of every year. So the budget expectations for fiscal year 2022 was actually prepared in March of fiscal year 2022. So we didn't actually know exactly where these expenditures would end up, but it is important because these estimates of fiscal year 2022 actual drives the budget for fiscal year 2023. So if we save more than we expected, that contributes additional funds to the ending fund balance in 23. And the reverse, it becomes clear that if we estimate too much of a savings, that could offset the potential savings we're expecting in fiscal year 2023. I think that'll make sense as we walk through this, in that fiscal year 2022 actual salaries and benefits, here's salary and benefits here, came in at $38.7 million. And we estimated for the fiscal year 2023 budget, $38.9 million. Now that's close, but there is a difference of $173 of additional savings. We thought we would spend $38.9, but we actually spent $173,000 less. So that's additional savings that contributes to the 2023 budget. Now, under supplies and services, you'll see that we estimated spending $12.8 million in this category, but we actually spent $13.4 million. So that's $657,000 in additional expenditures that we did not expect. And so that would reduce the amount of savings we were projecting for fiscal year 2023. But if we move on to capital outlay expenditures, you'll see that we actually realized $9.7 million in expenditures, but we expected to spend $10.5 million. That's the figure we put in as our estimate for fiscal year 2022. Again, that leads into the fiscal year 2023 budget. So this $761,000 excess will offset this $657,000 shortfall. So between all of these three expenditure categories, we're actually pretty close to where we expected to be in terms of net savings, or there isn't a deficit. So we are going to be saving based on the actual 2022 expenditures compared to our estimate of the 2022 numbers that were used in preparing the fiscal year 23 budget. Any questions about the expenditures before I move on to internal controls?
No questions from me. I didn't know if any of my counterparts had any questions or not.
All right.
I'm not hearing any, so I would say continue.
A review of internal controls over cash handling. I introduced the work we're doing here to the Finance and Audit Committee meeting, or the committee at our last meeting. And there's also a summary, or a detailed report on the work performed in this area that we included in our financial services board report for the month of August, if any of the trustees would like to review that in more detail. In the second bullet here, I gleaned a section describing the procedures we performed. And for the handful of branches where we performed walkthroughs and reviewed checklist and procedure programs with the branches, we noted no exceptions, but these visits and observations will continue throughout fiscal year 2023. And I wanted to address the question that Chair Rogers had at our last meeting about examples of exceptions that we do find and how we address them. Because for these 4 observations or visits at these branches, for example, we noted no exceptions. They were near perfect in what we would expect. But in more recent visits we made to other branches, there were items that we noted that weren't exactly what we would expect in terms of the procedures we would like to see the branches follow, but they weren't really significant. For example, there's a closing procedure for cash that happens at the branch every night. And then the next morning, those funds are verified again in what we call our opening procedures. And one person prepares that report and a person in charge approves it. And they usually show that by initialing or signing off. And there were cases where maybe an initial or sign off was missing, or maybe the opening procedures weren't performed at all. But unless we see a trend in this kind of deviation from procedures, or there's a huge red flag in that significant amounts of cash are missing, we don't consider that a significant exception or a finding where we would believe that we would have to take corrective action, do more training, and then report it ultimately to the executive director or the Finance and Audit Committee meetings. So there are exceptions, but unless they are a significant red flag, that's something that wouldn't show up in the reports that the Finance and Audit Committee meeting or committee, would see. Moving on to our annual summary or review of operational controls. This was another report we prepared in time for the September board meeting. So this report will, in more detail, is presented there. And I took another snippet of that report to show the procedures we performed over what we call daily cash reports, or DCRs. We distinguish this kind of review over internal controls from financial internal controls in that even though this review involves money, we're really more concerned about the procedures over the funds themselves. For example, every cash register at the library branches has anywhere between $100 or $200 in them. If we aggregate all of that, the total is less than $4,000. So our financial statement auditors wouldn't necessarily be concerned with any loss of funds there, because for their purposes, it's immaterial. But from management standpoint, we would still like to see these procedures followed to ensure that there's a control process in place for a variety of reasons. We want procedures in general to be followed. We shouldn't be taking any cash, whether it's $4,000 or $4. lightly, that is, found around our branches. And moreover, this is actually important for staff themselves. It really protects them, if there are any suspected misappropriation of funds, as long as procedures are followed, that we know that we've done the best job possible to ensure that any assets, in this case cash, isn't misappropriated. So this is something we're looking at from more of an operational standpoint versus any risk of loss financially. The same is true of this third bullet I included here. It's another review that we performed recently, and that report was actually included in the package for today's meeting. And that was a review over what we call small equipment. The district has a threshold for what we call capital equipment. That's $5,000. So only long-lived assets, $5,000 and over, are capitalized in the financial statements. It's depreciated and so on. So it has a financial reporting impact. Any assets that fall under that $5,000 threshold, the financial services does not track or account for separately the way our financial statement auditors would expect. But again, from a management standpoint, we do want procedures around assets, even if they don't meet that capitalization threshold, because this type of equipment could include technology equipment, what we would consider theft-sensitive equipment, anything from furniture all the way up to iMacs and everything in between, like a gaming console, an Xbox, or a PlayStation. And what we found in our work with library operations to review this process is that there are multiple inventory lists that the branches have that we believe should be consolidated. That was one of our recommendations. It would make things more efficient, or at least avoid redundancies and streamline the process for the branches. We also noted in our review of the dollar amounts involved here that there isn't much risk of loss at a certain point that we determined to be $300. So this is the small equipment threshold for the branches themselves, where items $300 and over, we would recommend tracking and ensuring there's a trail of the movement of these equipment items and their disposal as well. Anything under that, we believe would be insignificant, and it would provide efficiencies in that branch managers or persons in charge would not have to spend the time keeping track of those items. So that was the results of our recent review of this area. And we're going to
Forrester, may I speak on number 3? And I would say I would concur with that. We call it sensitive items that are below that $5,000 threshold.
Mm-hmm.
And I would say, in addition to what you shared, if you also are considering it for recommendations with those items, I would say also some sort of maybe annual account of those items, if that's not already in consideration.
Yes, that's a great point, Dr. Rogers. We actually found, this is a standard operating procedure that we're working on for my financial services team, that there are small equipment items that actually are capital items. We made our visit to the branches and found what the branches called small equipment. And these were clearly long-lived assets that were likely way more in value. And when we came back to the office and reviewed the transaction history, we actually found out that these definitely were assets costing well over $5,000 and should have been capitalized in our financial statements, but were overlooked. So to your point, that's definitely a process or review that should be done annually, both here in financial services and out at the branches. And we actually do intend to do these types of reviews and visits more periodically, likely quarterly or more often, depending on the circumstances.
Okay, and I strongly support, having part of that process being the disposal of those or transfer ownership of those items if they're surplus or something to that nature too. So I think you're spot on with the report and the recommendations there.
All right, thank you. And we're going to continue with this type of internal control review work. I note here that financial services will meet with the administration team. These are discussions we'll have to identify other areas where maybe we can make improvements from both a financial and an operational standpoint. We have goals, as outlined by the playbook, and this type of discussion and procedure programs we implement could greatly contribute to the efficient implementation or the reaching of our goals, from year to year. And I wanted to point out that these are, targeted, reviews or audits where we do intend to make improvements in these areas. So again, this is where the administration team and the executive director will discuss areas that are worthwhile to look at in more detail. And I also wanted to go over a few of the external reviews. And Mr. Chair, I think you asked about this the last time we met also. And these were the reviews or audits that we identified. The deferred compensation plan, the district actually participates in the deferred compensation plan belonging to Clark County, Nevada. And again, the deferred compensation plan is a 457B plan, basically the local government equivalent of a 401k. And that audit is driven by the county. We don't receive the results. We simply participate in the contribution or deferred compensation plan itself. And that is not done annually. I believe the last audit we're aware of happened in 2020. The public employees retirement system, PERS also performs audits, but those are also sporadic, or at least not annual. The last time we had a PERS audit was in 2018. And they go pretty far back in time. One of the exceptions they found was an employee where we made PERS contributions for that employee before they were eligible. The person was actually part-time, then became full-time and PERS eligible, but we over-contributed. It was a relatively small dollar amount, about $300, but it is an exception where PERS will tell us to make the adjustment. We show that we've taken the corrective action and make the adjustment, keep an eye on that type of procedure going forward. It is difficult in that example to determine exactly what caused that exception. There could be a lot of reasons that I can think of, but that particular example goes back to 1990. So that, again, that shows how far back PERS looks. And so they have a pretty robust scope in their review. Moving on to the workers' compensation, that's not actually an audit. It's not something performed by the state of Nevada. This workers' compensation audit that I'm referring to here is actually performed by our insurance broker themselves. They are insurance carrier and they perform a review just to ensure that we're making accurate premium payments from year to year. And the state of Nevada Department of Education performs reviews of our literacy program. The federal funds flow through the Department of Education in Nevada and funds our literacy programs. And so they also do not perform these reviews or audits annually, even though the last visit we received was in 2021. And that's what the Department of Education calls it. It's a monitoring visit. They actually show up in person and review various areas, whether it's financial or an actual instruction class taking place at our branches. And they're really looking more for performance and whether our literacy department is meeting its goals and the support function is performing as expected. For example, here in financial services, we're preparing reporting the way we should. And there weren't any exceptions in that last monitoring visit. In fact, the only items that stood out to me were the commendations for the work being done by our literacy department. So those are the external reviews or audits, reviews done outside of our internal procedures that I wanted to make the Finance and Audit Committee aware of. And before I open it up to more questions, I just wanted to acknowledge the work done by the financial services team. One of our senior accountants, Justin Tully, led a lot of this work, and he is actually a certified fraud examiner, has many years of experience in internal audit and financial statement audits. We have another senior accountant that was an auditor. In fact, she participated in the audit of the district's foundation. So that's the firm she came from before joining the district. And we also have a new accounting manager who's also a certified fraud examiner and a CPA who has many years of experience with financial and operational audits. So including myself, I just wanted to point out that more than half the financial services department are auditors. And so we're well equipped to handle this type of work and plan on expanding on it going forward. So if there's any other questions?
Fellow trustees, any questions of Floresto and team?
I just, Mr. Chair, if I may, I just want to make a comment and just for us to just echo your kudos to your team and add kudos to you for the amazing work that you guys are doing and making sure that everything's on the up and up. And just keep on doing it and keep on rocking and rolling. I love to see it.
All right, thank you.
And then for us, I would just respectfully request, I know that some of those external reviews and audits may be on varying cycles, but I would just recommend that whenever we are sort of expecting a review of any kind externally, that you sort of bring that to this group so that we can expect that we are going to be participating in an audit or review. And then certainly if results are issued, that you can sort of bring those back to us and sort of maybe go through the summary of recommendations and findings from such review.
Okay, will do. We'll definitely seek out results, even when not, provided to us directly, and keep the Finance and Audit Committee and the Executive Director updated on all of our work in this area.
Okay. All right. Kelly, do you have any questions?
Not at this time. I think he pretty much covered everything. Thank you.
All right. Okay, that said, we will go to public comment. Lynn, anyone for public comment?
No, there's no public comment.
All right. Well, thank you everyone for all the hard work and showing up today, and Floresto and team, as Nathaniel shared, great work. Make our lives a lot easier. I will go ahead and ask for a motion to adjourn.
So moved.
All right, we are officially adjourned. Everyone have a great rest of your day.
You too. Thank you.
Hi.
Bye,
Okay,
everyone.
everybody.